Hello everybody, welcome to TraderMerlin Show. It is your Thursday edition. No guest today, which is probably a good thing because we have a lot to talk about. We're going to talk about electric vehicles, talk about a lot of competition that Tesla is facing, and of course, probably a little sprinkling of Bitcoin. And if I can get to some retirement stuff, if not, I'll do the retirement stuff on tomorrow's show. For those of you who may be new, do me a favor, click that subscribe button so you can get more information about our daily shows that we've produce every single day live at 2 p.m. Pacific time. Big shout out to Big Evs, Ivzy, Dana, Richard, Lori, Thomasina, Zach, Tom as well. Good, and Tom, thank you for the comments. You guys sent in some great messages over the evening. Jorge, Les, Alex, and Joe Little says, I want a Tesla phone. You know what? Honestly, Elon Musk, there's nothing that guy can't do. If he came out with a Tesla phone, I'd probably be interested in buying it. All right, here's our topic du jour. Tesla versus the world. Yeah, I wanted to come up with something dramatic. I figured it'd be a little bit more exciting to have some almost doom and gloom. And if you think about what Tesla is doing right now, to me, that's exactly where they're at. It's them up against just about everybody. If you look at the numbers, and of course, you guys, we've looked at these numbers many times on this program, but the fundamentals for Tesla are, not the best out there. So what I wanted to do is start off by looking at Tesla. We'll start off with their numbers, and then work our way into some of the competition because, you know, I wanted to title the show, The Enemy is at the Gates. Because from my perspective, it feels like Tesla has built up this fortress. They are hands down the lead dog out there, the one that everybody wants to be. But now you have so many new participants, and a lot of them have a lot more capital and better earnings going on right now, which may bring in even more money, more partners for them, and all of a sudden the challenges facing Tesla could get much higher. So I don't have the fundamentals visible for you. I created a spreadsheet for myself of all the different companies out there, but I will do this. I will show you as we go through them the different companies. Now, I thought this was funny. I actually went to Tesla.com, and this is their website. Boy, I tell you what, if I looked at this first glance, I would have no idea that this was a car company. Of course, we could make the argument that it's not a car company, right? It's a technology company, as my friend Don Fron would say. They're not a vehicle, they are technology, and I have to agree with him. You look at what they're doing, obviously the technology behind the car is amazing, but they're also doing solar panels, batteries, roofs, etc. So this separates them a little bit from what other companies are doing, but here's their page. Right now, if you look at the fundamentals for Tesla, they have a market cap of $800 billion. Any guesses who in the marketplace is the closest to them, guys? 800 billion is monstrous. But think of like the major car companies of the world. Who do you think would be nipping at their heels? A close second, if you will. It might surprise you who it is, but I'm going to let you guys type that one in chat. So 800 billion is their market cap. Their PE ratio, which is the one that just disturbs me the most, it's 1,600. I think when we talked about this a week or two ago, was it 1,700? That's 1,615 right now as of close today. To me, it's crazy to think that valuation. And basically what a PE ratio like that means is they're not making a lot of money right now, but the price has been driven up because expectations about what they're going to do going forward is just, they're thinking that basically this guy is going to reshape the world. And who knows, he might do that. I'm not here to throw shade at Elon Musk, but the valuations seem a bit unjustified. And there was a great video, if you get a chance, go to my Twitter feed. It's at TraderMerlin, obviously. I posted a link to a crypto guy, or a retweet from a crypto guy, James Lopp. And he has a video that shows the wealth of the richest, I think, top 10 in the world. And if you go back to the 10 months ago, Elon Musk's net worth was about $35 billion. It peaked at $200 billion this week. So you're looking at a $170 billion increase in his net worth in 10 months when everybody else in that list spent their entire lives accumulating, and some aren't even over 170 billion. Anyway, yes, you guys are right. Toyota is a close second on there. So here's what we have for, obviously, the picture for Tesla. And, of course, we've all seen their cars. We know what the Model S looks like. We know a nice-looking car. We know the Model 3. They've got all kinds of, nice style to them. And they are, without a doubt, the lead. I want the Roadster is the one that I'm waiting for. I mean, it's a pretty nice-looking vehicle, if I do say so myself. Some people don't like those wings, but I like the outlook. I like the style. Bottom line, this is your benchmark that everybody is shooting for. Chrissy says, I will not trade my old Toyota for a new Tesla. I'm probably not either. We have some people in this room that are in the automotive industry, and I believe one of the numbers that was thrown at me was that they are 31st out of 31 car manufacturers in initial quality. That's not a good sign. And I know that someone said in here they're a cult, which Randall says it's a cult. I think it's just like Apple, Mac users. I mean, there is a cult there, which there's nothing wrong with it being a cult. As traders and investors, though, you have to step back from that emotion and say, what's the opportunity here, and when can I take that opportunity? For example, we know shorting Tesla right now shorting Tesla has probably been one of the most foolish ideas on the planet over the past couple of years, and there's a lot of people shorting Tesla. I want to short Tesla. I really believe to short Tesla, but I can't because of what's happening with price. Now, I will once certain conditions are met, and I'll get to that in a second. So yes, you guys are right. Toyota's number 2, and the distance between the two manufacturers is incredible. You have Tesla as a $800 billion market cap. Toyota is at 208. So literally Tesla's 4 times as big as Toyota. That seems a little bit of a stretch given what the company's doing. Now, I'll keep going down the list because Toyota... here, let me just share this list with you. I know it's going to be a little bit hard for you guys to read. Let me see if I can blow this up. I just kind of built this before the show today to kind of help me with this. Here is kind of some of the top automakers out there, right? And I apologize. Everything on the left-hand side over here, this first column, you guys you're going to be suffering because I didn't make it for you. I made it for me. But I've got their ticker symbol. I'll put it at the top here so you guys can look at some of these charts as well. Here's your ticker. Here's your company. And let's see what else we got. There we go. Pretty much everything that we need there. You can see there's your Tesla, $800 billion market cap. Toyota is here at a very distant 208. But what's noteworthy is this. Look at the difference between Tesla and Toyota on earnings per share and PE. Tesla has a 1,600 earnings per share or PE ratio, which means it's just astronomically expecting great things down the road. It's just huge growth potential. That's what the people are assuming. Toyota has a PE ratio of 9. Like, holy cow. A very, very low PE ratio. So if you're a value investor, you might look at something like Toyota and say, yes, there's some value here. Also, if you're looking for income, earnings per share, Toyota's making $16 per share. So you have a stable, undervalued company here with Toyota compared to Tesla, which is 15 on PE, but they are making money at 52 cents per share. Now, if we continue to go down this list of manufacturers, when I said Tesla versus the world, and yes, Don's here with us today. Yeah, delete Nikola. Yeah. Don't steal my thunder, Don. Nikola was on this list, but they have done an about pace very quickly. So what I thought was interesting is here we have new entrants coming in, and I wanted to call it enemy at the gates, but I thought it's Tesla versus the world is kind of a better one. Let's look at GM for a minute. Now we know GM was going to start doing some work with Nikola. There was a partnership deal potentially in place, and then GM backed out of that, and now GM. If you look at their website, it's kind of telling. I have a lot of different websites here, so bear with me. They've done a full rebranding. They got a new logo, but look at their website. You go to it, and instantly, you can tell that their main focus now is what? It's not gas guzzlers. It's not going to be their, different products. It's basically saying, as an overall umbrella, we're making an electric vehicle for all. And it's interesting if you look at what they're doing. They're building this kind of like surfboard power plant, and that is the model, the base that will be used for all their vehicles. So it's real simple for them to scale up and to make many different models based off of one platform, which is a very, very smart move. But I thought it was interesting because if GM is all of a sudden going all in, to me, that obviously poses a pretty significant threat. Now, we can make the argument that GE or GM has been a failure for many, 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 many decades. That's besides the point. Bottom line is they are a new entrant into this space. Now, as Don said, you had Nikola. Now, you guys might remember a while back we looked at Nikola, which I didn't like it. I thought it felt like a scam the way the SPAC worked, and all of a sudden it spiked up so high, and we were talking about shorting that thing. Long term, it might have some potential, but it just seemed a little fishy at the time, and I was optimistic because of their partnership with GM. As soon as that thing was pulled out from underneath them, it looked to me like that Nikola was not going to do very well. Well, check this out. This is the Nikola website today. Where is it? You'll notice that they no longer have that really cool, futuristic-looking pickup truck. That is done. Basically, Nikola has backed themselves away from that space and is now going to the transportation industry, which, they might find themselves a great niche there. but all of a sudden those really cool looking trucks that were getting a lot of people to buy Nikola stock have all of a sudden been pulled out from underneath it. So, Nikola, for me, from a car perspective, is probably a done deal. Don says GM's on the map. Ford too, and that's one of the questions today. We got Tom's like, I want to look at Ford and GM, so we will take a peek at that as well. But there's so many more companies. I'm going to show you that spreadsheet again. I'll just kind of go through the list here. There's a couple on here I think you should pay attention to. We have talked in this program in the past about NIO. A lot of people really, really, really high on NIO, thinking this is the next great thing that's going to challenge Tesla out of China. Now, not saying that's not going to happen, but as you can see on their earnings per share right now, they're losing $44 per share. That certainly is one of those pieces that'll lead you into bankruptcy. Of course, they are publicly traded, so they got some retail population to give them some money while they burn it very quickly. PE ratio of 90, no PE ratio because they're not making any money. So NIO, from a chart perspective, looked great, but this scares me if they're not making any money. The one that no one has been talking about, at least in this group here, and maybe Don, your group is talking about it, is BYD. I've been looking at a bunch of the BYD vehicles. It means build your dreams. It's backed by Warren Buffett. It's BYDDY is the ticker symbol. They have a $97 billion market cap, a PE ratio of 230, which, that's definitely high compared to the S&P 500. But your earnings per share, they're already making money, 28 cents per share. Now, here's the big asterisk. They're in what country? China. Yeah, I don't know if I trust the numbers coming out of China, but I'm pretty sure Warren Buffett isn't going to back the dead horse. He's going to be backing something he feels has potential. And it's kind of shocking to me to see Warren Buffett jump into this space because it seems like it's new technology. And to him, new technology is like, run away. Anyway, let's take a look at the BYD vehicles just so you guys can have a peek at that. As I run through a bunch of different stuff here, there's our Nikola. That Nikola truck is pretty nice. This also is, before I get to the BYD stuff, take a peek at this truck. This thing is gorgeous. And once they show you the interior, it almost looks to me like you wait 5 years, there'll be no need for truckers. These will be fully automated vehicles. I mean, this thing looks like it pretty much drives itself anyway right now. All right, check out BYD. This, just from the front end, this almost looks like a Corvette or an NSX. I mean, that's a sexy looking car. But what's interesting is they have a ton of different products. And I think, as Don's with us here today, one of his main points has been, look, Tesla is not just a car company. It's a technology firm, right? They're doing so many different things. And I think that's where this actually makes them a competitor as well. Look, they're doing passenger vehicles, commercial, they're doing railways, batteries, and electronics. So, apps and phones and things like that. So I think that this offers some diversification, which can be a hedge when you're buying a company or buying shares of a company. It's taking a little bit of risk off the platform of it's just a car company, right? But anyway, yeah, it's a good looking vehicle. Let's see, there's a few others. They have a whole bunch of. That's really a bad sign when you click a link on their website and it doesn't work. Doesn't make me very confident in their products. But I looked at a bunch of the vehicles and the reviews are pretty good. But I like the fundamentals, right? I do like the fundamentals on it. All right, what else did we have? We had, on that list, there were a couple others. I wanted to show you these companies just so you can see them. And then we'll go to the kind of solution here because I, for one, feel it's very, very risky to be trading that Tesla shares right now. I know Don's going to be like, what are you saying? I'm killing it. Yeah, you probably are right now. Let's go look at League vehicles. This is another one that most people haven't heard of. Let's see, there's GM. Here's Xpeng, Xpeng. So they're making an SUV type, super long, smart batteries. Here's your NIO, which has a whole different lineup. I mean, they all have that same basic Tesla feel right now. I feel like they're kind of all stealing that style. Yeah, even Nikola had a website. They did. This is the one I like. And it's a little tricky to say, well, how do you buy into Rivian? Because they're not publicly traded. They might do a SPAC. But you have the Rivian, which is a pretty unique looking vehicle. It's a pickup truck. They have a couple different models of it. But what makes this one interesting to me is its backers. You have Amazon and Ford are both backing this product. So to me, you have Amazon on board. You've got your money is not your worry anymore. You've got backing here. And I think that gives them a real potential for the future, at least to carry this product through to market. Again, you have the RT1, which is, I think it's got the dumbest looking headlights on the planet. I feel like this is some like 1950s cartoon for Looney Tunes. Look at the headlights on the thing are just ridiculous. Don says, high risk is measured by position size. Totally. But you gotta, I mean, Don, you've been doing this so long, you understand that most people have an issue when something starts to go against them and they don't get out. You and I were experienced enough to know that I can manage that risk by just getting out. Of course, with Tesla, you do have to worry about some gaps, but it shouldn't be too bad of a gap. It's not like a pharmaceutical or biotech. But most beginners, most retailers that just start off, they don't have the discipline to pull the trigger or put a stop in the system and get out when they're supposed to. So next thing you know, they'll buy something at $800 a share because somebody told them it's going to 4,000, and all of a sudden, for whatever reason, that security is now trading at 200, and they still own it. And that's the reason I think a lot of people really get smoked in the financial markets, is just lack of discipline or position sizing, which are two of the most important pieces to make it. Yeah, I think this vehicle is really, really ugly. I would wonder, I would see if I could buy a new grille and get those different headlights, but that one looks cool. From the side, I like it. Almost looks like a Toyota. It's got a little more slope. It has a pull-out piece back here that basically has a stove and range and all this really cool stuff. Yeah, they look like the Dyson fans. Absolutely. What else ones we had? So we had Nikola. We talked about that one. This one's an interesting one as well. This is actually, I believe, on a Korean exchange or Taiwan exchange, so you can't get it here in the U.S., but my guess is they'll probably bring it onto the NYSE if they can. Is Faraday Future. They make some really nice looking vehicles as well, and I do believe they have other platforms, so it's not just the vehicle, but again, I think having multiple places to get business operations from is the key. What else do I have? So let's go to the bigger picture here. So you've got one car company which has been, or one technology firm to appease the masses, which is Tesla, which has been getting all the market share, all the fanfare, all the publicity. It's really been booming. And of course, riding the coattails of that has been companies like NIO and Nikola when it was hot, and all of a sudden that thing's just a dog. But it begs the question, is it worth the risk? Now, there are some in the group right now that are going to be like, look, I'm in it, I'm position sizing, I'm going to manage my risk. Great, that's good for you. A little concerned having an extremely high PE valuation like this, that at some point it'll come down to a more realistic level. What's realistic? I don't know, is 300 a realistic number? It's still high given historical valuations, but I'll tell you what, if Tesla drops to a PE ratio of 300, there's going to be a lot of really unhappy bulls out there. So from a risk management perspective, my thinking would be that you really need to diversify your EV holdings. So if you are someone who's a little bit more of a passive investor and don't want to focus on just one thing, I would say probably best to buy something that's a mix and diversified, like an ETF. And I'll run through about 4 or 5 of those right now that I think are your best bet. Now, there is a very interesting risk associated with all of these ETFs I'm going to show you. Now, so let me go in and show you real quick the analysis, because I believe he's in here today. I think he just ran up there. Where was it? Gary says, have you spoke to the dependent on Tesla? And this is a question that came up from viewer. Let's go to this one here. And this actually came up from Scott as well. So I got multiple questions on the same thing. Scott says, interested to hear your take on the sideways action in Tesla for the last couple of weeks. The longer it goes sideways, do you think that that's strength or weakness? Big players adding or taking profit? Here's the basics about that formation. I'll break it down for you in the price chart here in just a sec. With a flag formation, I'll give you a story about the bullish flag formation. It's funny because this is one of my coworkers many moons ago. He was an Egyptian guy and he had this really heavy Egyptian accent. And I was training him to be an instructor at Online Trading Academy. They have to go through certain steps and present things from a particular perspective. And he says, would you mind if I teach this section? And I'm like, sure, yeah, no problem. And it was on chart formations and patterns. We did a lot more on that back in the day. Now, he would go, it was all about bullish flag formations. And what he did is he drew it like this. And I apologize if this is going to come across as some people find it offensive, but you know what? I love his accent, so I want to do it in his accent. He'd be like, this pattern for me is extremely powerful. What I look for is a long pole, a long move up. This is the enthusiasm of the people who are buying and selling this stock. Then I like to look for this formation here. This is what you might call a bullish flag formation. For me, and I love this part, I have to put it on camera. For me, this is the gift of God. It was great. He would say, the gift of God all the time. For him, this was the formation that he looked for as an institutional trader. That was his bread and butter, right? And when he found this one, for him, it was not a sure thing, but that's his high probability setup. And we all have those setups we like to look for. Now, why was it this formation? Well, what you have here is something that's been on an unbelievable tear since, just any point on the chart, really. But what it means is that recent move up is acceleration. This bigger move, the bigger line there, represents the enthusiasm. It means the people are pouring money into it. And that trend is not going to stop until it stops. I know it's a stupid statement, but everything will continue until it doesn't. Just like I believe was Newton's law. An object in motion will remain in motion until met by an equal opposite force, something like that. So what this means is essentially this little pennant formation you have right now is actually a very bullish sign. It's not making new lows. These flags can work in a couple different ways, and I'll show you a couple here just to explain the topic clearer. So we'll go to more of a chart formation piece. Bear with me as I take off my snap mode. If Tesla's chart looked like this, and let's say price is bouncing off this lower black line, this is still a bullish flag formation. Price would be going sideways. Instead, what you have is it's a little negative because it's not making new highs, but it's, for me, take aside my dislike for Tesla shares at this price. All this represents to me is consolidation. It's a breather. It's that moment where both buyers and sellers are taking a little bit of a step back and saying, okay, where's it going to go? If the industry, if the institutions, the markets, the participants, if Don or myself felt that this thing was way overvalued and we wanted to just dump it because we felt we should, where would price be going right now? It'd be going down, and it's not. It's converging. It's making this little triangle. So if it breaks those lows, and that low being, call it $800. If you get below $800 and you've got a bunch of unfilled gaps down here, and I think you could see some pretty steep downside movement. But for right now, it's not. It's actually a really strong bullish formation. Now that said, I'm probably not going to be buying long Tesla once it breaks above these highs. I'm not really in the long business on Tesla, even though it's just done nothing but go up. I've been, every now and again, I will cherry pick my opportunities and end up going short on Tesla, usually by buying some puts. That said, this is a very bullish formation. If you take the Tesla name off of it and put it on any of the chart, it looks phenomenal. It looks bullish. Really, you're waiting for a breakout either above this downtrend line that I drew right here or above those previous highs, which the all-time high here for Tesla is going to be 884.49. So that's your answer to that one, Scott. I think that's a very bullish formation. Again, it's really a wait and see. My assumption is that Tesla needs to have a pullback. It needs to correct a little bit, just in the nature of price movement. Where does that movement bring you down to? Does it bring you down to the 730? Does it bring you down to that 640 mark? I think that would be a healthy thing to have happen. But right now it's still getting so much fanfare, and it's really getting everybody's money to come in. And people are pointing and saying it's the Robinhood traders. It's not the Robinhood traders. I'm sure that's a piece of it. This is institutional stuff. This is big money driving this one to the upside. And yeah, we talked about that earlier, Don. It's really what this is. It's a growth play. And with growth plays, you get very high PE ratios, and it's the expectation that 3, 5, 10 years down the road, this will be the biggest thing since sliced bread. Of course, sliced bread never traded at $844 a loaf. But yes, this would clearly classify as a growth company. It's just a question, when you're buying growth and you're buying the expectations of future growth, at what point do you look at it and go, even down the road, I don't see it getting to these valuations, right? That's the big question you have to ask ourselves. Okay, so from there, I would recommend for anybody who's looking for to get into the EV space, to get into electric vehicles, which is the hottest thing right now. It's incredible how popular it's become. Probably the safer thing to do is to buy something that's already predefined and diversified, an ETF, an exchange-traded fund that will allow you to get in. What's interesting is when you look at most of these ETFs that track the EV space, they're all holding Tesla. They're all holding the basic components. However, some of the components that they have don't make sense. And you look at Chrissy asked, where would I buy Tesla if I would? For which part, right? If I was aggressive in trading the breakout here, certainly a break above the all-time highs would be a buy point for me. There's a couple other points that I would be interested in, and that's going to be right around here, right around 735. I also like maybe around 660, but I'm not going to buy a Tesla. Period. It's just not my thing. Oh, yes, they do make a great product. Who said tulips? Not tulip bulbs. Yeah, that was an interesting. We could do a whole. That's one of the most misconceived things is the tulip bulb crisis. It was all because of the futures market that caused that thing to happen. The bubble for tulips. Anyway, let me show you a couple different ETFs here. Now, when I'm showing these ETFs, obviously these aren't like saying go out and buy these ones. You should certainly do your due diligence. But I've had so many questions about, NEO and BYD and Tesla and EV space. This is the best way to buy a basket of that market and step back and let it do its thing. And if Tesla drops 50% from here, that ETF's probably not going to get killed as much as owning shares individually of Tesla. That said, if Tesla rallies 50% from here, you're not going to get the full brunt of Tesla's rally. But anyway, it's a great way to buy into it. So let's go to a few of these. Here's some of the ticker symbols that I'll mention, and I'll go and show you there's 5 really that I'm looking at. DRIV, right? This is the Global X Autonomous and Electric Vehicle ETF. I'll put the volumes on them because generally that's the biggest weakness is the volumes. Now, you'll notice that almost everything for the year 2021, volume has really picked up on anything to do with EVs. Anything. I mean, volume is really off the charts now. So here's your chart of this bad boy going all the way back into 2000 when this thing was trading under $10. Now it's at $30. That's DRIV. Now here's another one. What's so funny is they're from the same company and the holdings are almost identical. It's IDRV. Same thing. You're looking from sub 20. Let's see where we're at. We're at 18, 17 and change, and now it's 47. They all look great. Volume is really high into these things, reflecting that surge and popularity into that EV space. Again, this is what's driving the entire market segment. You have Hale. Here's Hale. This is another smart mobility. Now, this one isn't just EV vehicles. This is also drones and alternative transportation vehicles. So this might broaden that spectrum, but certainly incorporating battery companies in there as well. You've got a huge move up on this one. It's up at $65. Again, the last year, and these companies have been fantastic. KARS. Similar picture. You're looking, in the high teens to $45. The question is, do you buy them now? I'm skeptical on it. I wait for a pullback in some of these. And eCar, which is the most expensive one I saw, they have a expense ratio of about 1%. Liquidity is very, very low on this one. But this is next generation vehicles. This one actually holds more diversified companies. Now, let me show you a couple things here. I had gone out and brought up the iShares. So here is that IDRV. Let me make sure this is IDRV because they're almost identical. Yeah, this is the IDRV. Notice on IDRV the holdings. Tesla, number 1. You got Tesla, Intel Corporation, Apple, and you look at this and go, wait a minute. What is Apple doing in self-driving cars? Yes, we know some technology from Apple. They're trying to get into the space, but they're not there yet. NVIDIA, okay, we know that the self-driving car chips predominantly using NVIDIA products. That's great. But notice Google's on here. I guess this is the AI. This is the artificial intelligence driving stuff. You also have AMD. So there's slightly different companies that you might suspect being in there, right? If I looked at this IDRV, I would expect it to have a lot of the car companies we talked about, BYD, and look at NEO and Rivian and all these different companies. They're not really in here, right? The major holdings, number 1, Tesla. Samsung Electronics, number 2. Intel, number 3. And then here's the same the list. It doesn't even look like I changed the screen, but this is the DRIV fund. So DRIV and IDRV are the exact same holdings. It's really weird and stupid to me. This other one, Hale. So make note of some of the major names that you see here. General Motors, NVIDIA, Qualcomm, Apple, Intel, Tesla. When I look at Hale, very different. I know it's a different list because this is not an iShares product. But you look here and you see you have AG Eagle Serial Systems. That one I don't know about. Plug Power, Ballard Systems, Blink Charging. So this all of a sudden brings you into a much more diversified one that's not just the car makers, but to me a lot about the surrounding infrastructure of the car makers needing charging stations, batteries, and things like that. So this is HAIL. If I remember correctly, it also, let's bring up the chart here. Yeah, it's also very thinly traded, right? Its average is 90,000 shares per day. Now, I'm pretty sure you're not going to, buy 50,000 shares of this thing, especially now it's trading at $65. But consideration for anybody who's looking to buy into one of these ETFs is liquidity. If you're buying a couple hundred shares, no big deal. What you probably get is a wide spread on these. The spread will most likely be wider than normal just because of that low volume. Now, back to our list here, because I want to go over two more. Here's that CARS one. Now, the CARS expense ratio is 0.7%. Every one of these I looked at is under 1% expense ratio, which is, it's pretty decent. I mean, you want it to be under 1%. Should be under 0.1%, but, those are reserved for index funds. All of a sudden, with CARS, I see a totally different set, right? There's your Plug Power we saw before. I've got NEO as their number one holdings, but Southern Copper, Infineon Technologies, Analog Devices, Texas Instruments, are they still around? Are they making calculators? I mean, who does that? Anyway, just wanted to show this because as you build out a portfolio and you're looking at, here's eCar, you're looking to buy something that may get you into that space, you may have a lot of overlap with existing positions you already own. So if you already owned Tesla, for example, well, this portfolio's biggest position in eCar is Tesla. Right? So always look at the holdings of any ETF if you're thinking about owning it long term. If you're a trader and you're going to be much more active, then who cares, right? It doesn't make a big deal. But I know that there's a lot of people have been asking me, what would you buy in for the long term here? And I would personally, if I was to have no choice but to buy it and hold on to it for a period of time, like let's say a year or 2 or 3, I would go with an ETF. Just, it removes a lot of the headache of managing each one of those individual positions. So there you go. Many of the EV makers won't survive the shakeout. Right, exactly. And what you're getting right now, and I think this is part of the reason that you're seeing small cap stocks soar, is generally in the roaring times when things are great, what happens is the big names, your Microsofts, your Googles, your Amazons, they're buying the small names. It's an acquisition phase, right? That's usually what happens in a big melt-up in an economy is all the small cap stuff gets bought, they get paid a premium for their shares, and that's what we're seeing happen right now with the Russell 2000. I mean, that chart is just unbelievable, the price chart of the Russell 2000, and that's because I believe there's a lot of optimism in that small cap space, a lot of the small cap companies being purchased, but what you're seeing now a little bit different is SPACs, right? These SPACs are bringing new companies to market that would traditionally take maybe a couple of years to get there. Now they're doing it in a very short window of time because of these SPACs, which is a specialty purpose acquisition company. And we did a show on that a couple weeks back if you want to go look at the archives and learn more on that one. Don says, I like all of those. Yeah, right? But the point wasn't that you like them, but if you did like all those names on that list, then that would be a fun to buy into, right? There might be a company here that has, for example, there was one in there that had Apple. And you guys know I just hate Apple. Which one was that? And it's just a matter of principle. I think it was these first two, the Drive, and yeah, Apple is the number 4 position. I wouldn't buy this one just because it has Apple. That's how stupid I am. But I like Hale. I like that it's a very diversified. It doesn't have a lot of the major names that I'm so used to seeing. Tesla is on there, but it's not the number 1. It's not even close to number 1. It's actually the 6th largest holding. You also have Baidu, which is interesting. But there's your NEO, General Motors, Ambarella, a lot of good stuff in there. All right, so that's my take on it. Tesla, for now, obviously is the lead dog. It's got the most attention out there. Its market valuation is nuts. I hope that you guys get a chance to see how that video on my Instagram feed. I got so many damn social media things that's driving me crazy. Let's go to, I think I put it up here, and I'll just bring it up just so you can see it. What was interesting, is how quickly this changed. Yeah, so when you guys go there, look for this one right here. This is the page, and I'll leave it up here right now. Watch Elon Musk on the left-hand side of your screen. I think it's fantastic. So he's at 27 billion, and this is in March of 2020. 27, 30. With the acceleration of change, even this guy here, Zhang Shenshan, I apologize if I butchered his name, he was almost a nobody on this list. And you'll watch how quickly Elon Musk on the left-hand side accelerates. It's mind-boggling how quickly this moved up. And, this obviously was S&P inclusion. It's also products and him coming through on a lot of the things he said he was going to deliver. But this isn't a period of years, guys. This is 10 months. 10 months. Yeah, Don Fron, he's going to make his own ETF out there. You could do it. But right here is where all of a sudden he just accelerates at an unbelievable pace. And, just recently, this is as of December 2020. Here we are now in January, and he passes Mr. Bezos as the richest man in the world. But what's interesting is, these people have been on here for a long time, and it's taken them decades to get there. This guy, yes, it took him decades to get there, but he went from $37 billion to 201 in 10 months. Pretty incredible. All right, let's see. What other questions you guys have for me? I wanted to kind of get to some of those questions. Oh, there's two more, sorry, and that was from Tom, who asked me this one. I want to look at GM and Ford. I know, Tom. I added a little bit of excitement there for you. Fundamentally, it was interesting when I looked at Ford's spreadsheet. They went back in a negative. They're losing money. Now, Ford, obviously, the past couple of days have been phenomenal for Ford. Technically, you're looking at a monstrous breakout right there, right? It's a huge breakout. Now, I'm going to take a step back here and go to the weekly just to put it into perspective from the bigger term. It goes into what we talk about on this show all the time, which is the trend is your friend until the bend at the end. And if we went from this downtrend that started in 2014 and just ripped through some of these highs here, of course, I'm loosely going through the highs, you're looking for a break above that, get you back on track. And why can I not see my scroll bar? We recently broke through that. And there's two things that have happened on this. Not only did it break this downward trend line, but if you're using a horizontal line like I like, and we've had Corey Lane talk about this one quite a bit, you had that rally up to this $9.56 mark on Ford, and then it sold off again and broke through. This is that ascending triangle, cup and handle, whatever you want to call it, but this was the defining moment for Ford. Now, to me, it begs the question, where's it going to go from here? I don't know the fundamentals because I'm not a big fundamental guy. I don't like to look through the fundamentals. It bores the hell out of me. Technically, Ford, it just basically slammed right into an overhead supply level as we speak today. Actually, maybe not today, but on the weekly time frame, right at $12. My guess is you'll probably have a pullback, probably to about that 1050 mark. And to me, you have an uptrend in place here. So now it's a story of buying Ford. And maybe this is the excitement of them rolling out the new Mach, the Ford Mustang Mach, what is it, Mach, E-Mach or something like that? But yeah, this looks pretty optimistic for Ford, which honestly, from the monthly time perspective, Ford has not looked good. Ford looks like you basically just wasted your money for a long time letting it just sit there. Ford just received a buy recommendation. Well, damn it, that means you should probably sell, right, Richard? The beauty of institutions. Oh, boy. So Ford, I do like it on the daily time frame. I think it looks great. I wouldn't buy right now. I'd wait for that pullback, and my guess is this previous high over here, right around 1050, would probably be your stopping point for that. So another dollar pullback and join that trend to the upside. You could, if you wanted to, wait. There's multiple ways you can look at this. This trend line's not going to work, so you trend line aficionados, this is not designed. I'm not drawing this to be perfect. It's really just to gain a sense of where that trend went. You ballpark in there. You can say if it gets down below that trend line, then you end up getting out of it, or you use that as an add point to jump back into this one. Tesla has this electric Jeep thing or Ford has an electric Jeep thing that looks like, you know what? Let's see what the reviews are. All right, GM. This is this one I'm a fan. I like GM. I don't like this rally that you've seen over the past few days simply because that means I missed the boat. But again, you have this similar picture, right? You have a higher highs, higher lows going on since those April lows. Of course, that's the entire market. Now, what's going on right now? Big move up. I think, again, this is more anticipation of that new EV Hummer being released. I loved it. I think that thing looks pretty much... I think that this is way deep in the weeds with regards to competition for the industry. I think 2021 is when they're supposed to release that GM, the new Hummer. It looked amazing. I love the video on it. Of course, there's some features in it that just, I may actually end up buying that thing. I can't imagine buying a Hummer. But let's look at it from a technical perspective. Obviously, GM suffered significantly, as everything did in the initial pandemic drop in February of 2020, but it's been ripping ever since. Now, from the long-term perspective, this is a weekly time frame. I'll show you a monthly as well. It looks like, again, you would have just wasted time by holding anything with GM. Is it long in the tooth now? Has it shot up too much? Yeah, I don't know. I'm a little skeptical on it because I just feel like it's moved too far too fast. What I do like that this is, it seems like GM is basically making this move right now. They're going, Tesla has dominated the scene. Their market cap is through the roof, and they're basically the Tesla. They're just that nice little car, right? They got a couple of different models, but what if we can be the first to have recreational vehicles, all off-road? Ford, now I saw the comment about Ford rolling out their Bronco. Very disappointed with the Bronco, by the way. If you saw the prototypes for the Bronco that were released like 2 years ago, I was salivating. It looked like one of the coolest looking vehicles. Like, I am gonna get that Bronco. And then it comes out and it looks like a Range Rover right now. Which is, it's not bad, but I want something unique. Anyway, that's rolling out. That'll probably be a pop to the bottom line for Ford. A lot of people expecting that. But I think what impresses me about what GM is doing is they're saying, we're going all in on electric vehicles. Just by looking at their website, it's like they're making the world know that this is where we're headed. And if they can put all their resources and chips in that basket, then you might have a lot more upside here in General Motors going forward. And I think that will chip away ultimately at companies like Tesla. Of course, we're talking down the road, and that's going to be ways down the road. Now, the other side of this is the diversification of models. So from what I was reading, Tesla's not doing, I don't believe Tesla does this, the other companies are doing one chassis that's going to be built for all the models, which, of course, if you're looking at scalability and different product lines, you build one basic frame, battery pack, structure house, and you just put the different tops on pieces on top of them, the bodies. That's where a lot of these car companies are going, and it looked to me like with the GM, that's where they're headed, is having one battery packs skateboard, as Don said, looks like a surfboard skateboard, but yeah, it's just basically one little longboard out there full of batteries. And you would like to have the GM, the Hummer, boom, there's your Hummer. But you want to have the Cadillac, boom, there's your Cadillac on top of that one. Who knows? That to me makes it much more scalable going forward for these guys. Okay, GM partner with, yes, so that's true. Well, here's what I think, Don, and we actually mentioned this at that time. Don's, for the podcasters, Don says, GM partnered with Nikola, so just going off track record, not holding my breath, meaning they're not going to come through to their work. Here's what I think happened, and this goes back to something that happened in the Online Trading Academy years ago with an evil other trading school out of the East Coast, which I will leave their name out of it. I mentioned the fact that said, look, it seems to me like you have GM has the infrastructure, they have the plants, they have all the facilities, they could ramp up a production of this very, very quickly. What they might be missing is the technical expertise of making that electric vehicle. So maybe they went through, decided to do, I don't think they officially made the deal, they were in talks to do the deal, they said they were going to, and then they backed out. And they do that to get ideas, to talk to the experts, to maybe to poach the talent over there that was working at Nikola, if there was any talent, I don't know, and get ideas on how to do it themselves, because very quickly you saw this GM product, or this Hummer product, all of a sudden was being pushed much more than the Nikola truck. I mean, we saw the Badger getting a lot of popularity, but all of a sudden the Hummer looks like it's taken over, and of course it's getting lots of advertising. And this may change market perception as well. One thing I find very interesting about Tesla, they don't do any advertising. You don't see Tesla, and they're saving hundreds of millions of dollars a year by not having to go out there and advertise aggressively, right? You look at Ford and GM, these guys, every Super Bowl, every sporting event, I've got ads and commercials for beer and trucks. That's pretty much it. Well, that may take a little bit more market share out of the Tesla Apple here, which is why I said it's Tesla versus the rest of the world. And I think we all agree, except maybe one or two people here, that you are going to see more and more challenges for Tesla going forward. Even though they're diversified in other businesses, they've had their lone party, and all of a sudden now there's a lot more guests there. Okay, Alan, send me that question in because I'll forget. Send me the question in at TraderMerlin@gmail.com. I didn't change the date for today's show. This is supposed to be the 21st. You gotta love me. This is me being a slacker and trying to do too much today. Send me at TraderMerlin@gmail.com that question about algos and about tape reading, and I'll go over that tomorrow because I'm pretty much done here, and I know that will be a longer topic, and I don't have a guest tomorrow, so I'll just talk about those questions tomorrow. All right, what else do you guys have for me? Richard says GM does not have all the bells and whistles the Tesla has. Right, exactly. But what you got to do is you need to get that vehicle out there. Actually, I disagree. If you look at the Hummer, watch the promo reel on the Hummer. They have ridiculous technology. Now, they may not have self-driving stuff right now, but that'll be the next piece. But yeah, the video for the Hummer, I don't know if you guys had a chance to see that. It's a pretty cool looking video. Let me see if I can bring it up here. Yeah, I don't think I was going to go and bring up the different cars, the brands, but their video for the Hummer was pretty impressive and had a lot of amazing technology that Tesla doesn't have. It was pretty interesting. Of course, that's the same with every car company, right? They're all going to have little different features and functionality, but generally what happens over time is GM is going to... You don't think GM hasn't bought a Tesla and it's sitting in their designer studios and they pulled every piece of technology off that, and they're looking at it going, "Ooh, we could do this. Yeah, let's keep that. No, we could make this one better." So I think this is what Tesla did to the whole world, is they started this revolution, without a doubt. Companies buying Teslas and saying, we're going to make something that looks very similar and rebuild our own model based off this. Maybe we'll make some pieces better. We'll just get rid of some stuff that's not needed, etc. But a very interesting change happening as we speak, which brings us to the Tesla it's Tesla versus the world. I think I had it up there a minute ago. Of course, now I don't have it up. Anyway. All right. GM is your grandparents' car. Did you? Now you're going to make me go and show you this video. I don't know if I can find it. There's no way. That's not my grandparents' video. Hopefully this is not going to... Where is that GM one? All right, I won't bore you guys with the details, but that Hummer EV is ridiculous. And I would not call this my grandparents' vehicle. I don't know. Is audio coming through? It's 5 minutes, but I'm not going to show you the whole thing.
Driving precision. Hummer EV is engineered.
That ain't my grandparents' vehicle.
Four-wheel steering to reduce turning.
Four-wheel steering? And my grandpa's vehicle? Hell no. This thing is pretty badass. But anyway, we will leave it at that. It's I'll fight everyone. Bring it on, Don. Let's do it. Anyway, I would definitely not call this my grandparents' vehicle. It is pretty impressive. Anyway, that will do it for today, guys. Hope you enjoyed that one. And as you guys keep sending me questions on EVs, look at some of these ETFs. Check a couple different things. Number one is your diversification, right? Within that exchange traded fund, do they have companies that you want to have in your portfolio? I mean, now with those 5 that I showed you, you can pretty much cherry pick and pick your own portfolio there of securities. Number 2 is check that expense ratio. Make sure it's not too high. All the ones I showed you today were under 1%, which is good. Some are around 0.5%, which is even better, especially if you're buying a big block. And the third piece here is make sure that they're liquid enough. If you see something that's very liquid, like I think KARS or EKAR were very small, I would encourage you to not trade a big block of shares because it's a bit dangerous. All right, cool. That's going to do it for me, guys. Thank you guys so much. Hope you enjoyed that one. Again, if you have comments, questions, topics for tomorrow's show, do me a favor, send that in at TraderMerlin@gmail.com. You can see the email on there, or you can just put your comments down below the YouTube video. That always helps. Until then, everybody, hope you guys have a fantastic evening. I will see you all tomorrow.